Welcome to the Treasury Update podcast, presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in.
Welcome to the Treasury Update podcast. This is Craig Jeffery with Strategic Treasurer. I'm joined with Layne from Deluxe. Layne, welcome to the Treasury Update podcast.
Thank you so much for having me. Happy to be here.
Every area of finance seems to be undergoing significant change. Technology is making a change, and demands for organizational efficiency and control are pushing changes. And in today's podcast, we'll be discussing Receivables strategy, mastering the move to digital payments. Many of our listeners, many of you, know of Deluxe as being a huge player in the digital inbound receipt solution space. And as we prepared for this topic, we described it as building it like a cake, layer upon layer. So hopefully nobody's hungry who's listening. But just think of this concept as we talk through today's podcast as building it up in tiers or layer upon layer. So Layne, it's good to be with you here today. I was wondering if we could begin by talking about closed loop payments, starting with RTP, and maybe you could provide a definition of closed loop as opposed to open loop payments. And then let's get into the challenges that this brings up.
Absolutely. And I think it's a great place to start, just setting the foundation. And really, we've seen a growth in these closed loop networks, right? So when we think about the difference between a closed loop and an open loop network, really what we're talking about is who are the players inside of that network, right? So within a closed loop environment, they are people that have access to a common platform. So a good example of that are digital wallets that we see popping up everywhere. And what happens is when people send payments in between this closed loop network, everyone has to be a part of it in order to facilitate the payment and make the transfer and receive the funds, which was really, really great because it happens quickly. But when we start talking about a broader network of payments and a broader range of people that you're paying, we start talking about more like open loop payments. So what that means is just essentially is it's not just the closed network of participants, it's more open source. So you think about things clearing through like the Fed, different things like that are really what constitute the difference between closed and open loop. And real-time payments can kind of straddle the difference between the two when we start to think about it, really. There are many examples of faster payments or real-time payments that occur within that closed-loop network. But a lot of things in what we talk about and building strategies really rely on those open-loop networks of real-time payments. So when we think about the clearinghouse, FedNow, while they do have a captive audience of sorts, they're not the traditional closed loop network that we've come to know with certain things like funding a digital wallet. And one of the things that helps eliminate is that need for that recipient to have something specific tied to that wallet. So one of the biggest challenges with closed loop networks is everyone has to be present. If you're not present, you're not going to get paid. And so with the rollout of real time to be more open loop, and it still has a closed loop because the banks have to be participative, but that's where companies like us at Deluxe can kind of step in and help out and make things and facilitate the payments between these networks and be that connector. We start opening up those networks to more and more people and making real-time payments something that's probably more achievable throughout the broader scope of people receiving and generating payments.
You described a little bit of the difference between closed loop and open loop and RTP straddling both of those. Any additional thoughts that you would want to leave with the audience? When we think about technology, usually open tends to be better than closed, and we see all kinds of examples. You know, when you think about this or when you describe this, is it better to go towards open or closed, or would you say there's certainly trade-offs?
Yeah, I would say there are trade-offs. I think to your exact point, open is always better because you're going to get a broader range. And I think when we look at the history of real-time payments over the past 7 to 8 years as it started to emerge, there were a lot of challenges when it rolled out at first. I mean, even within the ISO standards, right? There were challenges with the standards that were published, and then things have been evolving as they're going. I think in the beginning, you couldn't even indicate whether it was a credit or a debit within the ISO 20022 standards. And that has all evolved as we've seen these real-time payments take off. As we look at real-time payments and as they evolve, really we're going to start to see it become more of an open loop. And I think that is what we're starting to see with things like the clearinghouse and FedNow, and trying to discover which one banks and businesses are going to lean into, I think is really going to be the one that gives them the most open source of that network, right? So really the clearinghouse is fairly limited in scope just because of the nature of what it is. But when we start talking about FedNow and it starts to expand to a broader range, we start to look more like an open loop network. You still do have to be registered, but again, it starts to have a more openness and expansiveness that I think makes real-time payments actually something that can be viable larger than just the small range of players that were doing it in the forefront of the initiatives.
Yeah, thanks for the closed and open loop description examples. Just for those who are listening in, particularly those who are outside of the United States, the two examples, the clearinghouse and FedNow. The clearinghouse is a clearing system owned by, well, essentially an entity owned by banks that the banks manage, as opposed to FedNow, which is run through the Federal Reserve System, which is owned by the central bank. And most countries have central bank managed systems, but in the U.S., we've got both.
Absolutely, we do. That's what makes it fun.
That's what makes it fun and gives you more different payment options and more different channels. And, as a large economy, it does provide some flexibility and some competitive pressure. Let's move to this first layer. If we're using the cake analogy, we got the first layer, how to get paid in an environment of more or multiple. Better payment systems, faster payment systems, new payment systems always have some great features. However, it's more. It's like when you used to go to the grocery store, it was paper or plastic bags, and now it's paper or plastic bags, bring your own, carry it out loose, and it creates some additional complexity. And if we're thinking about receivables, now I'm accepting an increasing number of payments. So maybe you can describe how to get paid in this environment of more or multiple.
Yeah, absolutely. I think you touched on a really critical point, is it is more and multiple, right? It will never be just this or just that. Everything we add to the payment scope that consumers and businesses have really is additive in nature. And that's like, as I've been in treasury, one of the things that I've seen throughout my career is that, there's always this idea of something that is going to come in and be a replacement. But really, I think what we see is they're all complementary, right? So real-time payments is great for physical payments, is a great complement for other types of digital payments. So when we start talking about it, you really have to have a really inclusive strategy that incorporates all of these different methods of payments. When real-time payments, I think, originally came on the scene, a lot of people said, we're going to see same-day ACH maybe go away, because that was the first evolution of more of a real-time payments. I mean, you had wire, and then you had same-day ACH, and now you get RTP on top of all of that. But what we've seen is that, yes, there has been volume that shifts from maybe one channel to another. They all still have a place and purpose within the overall commerce and the overall economy. As you start talking about higher value payments, wire is still going to be a very, very big player. As you talk about low value payments, and that's something we talk about all the time, especially in the person to business or consumer to business space. That is where things like real-time payments are going to be more and more applicable, because they do have that same thing of settling in real time, but oftentimes they have a dollar value cap. And I think we've seen the real-time payments dollar value cap expand as the use cases have continued to expand. But really, again, as we talk about it, it's a game of multiple. And how do you efficiently, proactively support all of them? And as we look at it, and as we look across our business, and as we talk with banks and we talk with small businesses, middle market, everyone is really looking at this from a really inclusive strategy perspective. As I look over the past, 7 years, I think there was a focus on specific channels of these payments that are coming through. But now as I see and I talk with banks, and feel very, very lucky that I get to talk with some wonderful colleagues throughout the industry, it really is, how do we manage all of it? And we can't just focus on one piece of it. It has to be something that allows us to harvest the information, harvest the money, and get all of that in a really, really great place. And without a recipe card, if we're using the cake analogy, right? Without a recipe card that delineates all of the different channels, you're going to miss the ingredients to make something that's really, really impactful.
This comprehensive look at all of these, there's going to be more. So how do we handle that? You talked a little bit about the information side. I know we talked about that before when we were prepping. It's like some payment methods come with great amount of information. Some of the physical methods used to have everything shown in different columns, and some of the electronic methods have a way of providing that digitally so it's really easy to integrate. Some of them leave it off. And to me, that seems to be there's multiple methods and not all information is the same.
I mean, you kind of hit the nail right on the head on that one. Even if we look across like all of the different electronic payment channels, right? You have it. I sit in the receivable space for the majority of my career. So I think about, electronic bill presentment and payment, which if you're not familiar, that is just simply like a business being able to take payments for their invoices and present them online. That comes with a different level of data than an ACH transaction comes with in some regards. Different level of data than merchant card transactions come with. Oh, but then you go to one provider for a solution or another, and they have their own ways of presenting the data and what they choose to capture and how they transmit it. To your point, it's almost can be overwhelming. It feels like to take all of this information about, okay, I've got my money. That's great. We know moving money is the easy part of this, right? That is the easiest part of the equation, is getting money from bank account A to bank account B. That's the easy thing. We can know how to do that. We've done it for years. We've done it for decades, however we look at it. We've done it for centuries, essentially, even before accounts were created. But it's that information that tells you how to apply the payment, where to apply the payment, how much it was for, what invoices. That's where things tend to get a little bit more complicated as we roll out the more and multiple. Because to your exact point, those physical payments that we were so used to dealing with, very information rich, but from the image, right? There were still pieces of that information that may not have been able to be captured automatically. So that's where, addenda records through the ACH transactions started to come into play. And as we look at things like RTP and how it expands and becomes more pervasive amongst payers, it's how do you get that same information density, but in a way that is easily integratable and easily applicable throughout all of your systems, whether that's your ERP system, your GL system, anything that you have to be able to take all of that information and put it into the systems for it to actually be useful.
You didn't say point of sale systems. I thought you were going to list that, but just because there's so many, right? There's this almost limitless number of items. I don't know that we talked about merchant services, right? We talked about different kinds of digital, but card is another factor there too. So we have to consider that, I assume, as well. And there's some other challenges with merchant services. I know one thing we've seen is paying on a net or a gross basis, timing differences. So there's another order of challenges there.
Oh, absolutely. I mean, we think, as a consumer, oftentimes you think a card's a card, right? And a payment's a payment. But on the back end, they look vastly different to businesses. And so to your exact point, I'm not going to use I guess I'm going to say the word, but I'm not going to use standardize, because I think we've seen that try to happen. And it's really, really challenging when you have central banks, when you have fintechs, when you have the clearinghouse, as we talked about at the top of all these different players in the space. Standardization isn't necessarily something that's going to be easy or even potentially even achievable, but it's how do you take what you're given and then what I will say is normalize it across all of these systems and payment channels.
That's a really good word, normalize, right? Make it so it makes sense, even though they're different, like translate it, if you will. So that's the first layer, the foundation, how to get paid in this environment of complexity or more and multiple. The second layer that we wanted to talk about was how do you gain efficiencies? And I don't just mean process efficiencies, but that's definitely a key part of it. But there's some elements of control and capital. Control is, the level of fraud is increasing. The criminals are more sophisticated. And then certainly on the Treasury side, the use of capital, the efficient use of capital and protection of capital matters. So how do you start talking about this second layer as we build on the first?
Yeah, I mean, efficiency is one of those key words that we hear everywhere, right? How do we gain efficiency? We feel like we're not efficient, as we talk with especially like middle market type clients or small business clients, that's a big challenge in their world because they're strapped with one of the other things you mentioned, which is capital, right? That is something that is in everyone's top of mind right now. And where do we allocate capital, especially given, some of the constraints we're under and some of the grander scheme of what's happening in the economic environment. But capital allocation is a huge piece of it. And what I'm seeing and where I believe a lot of this capital is going to be going is to your first point, and that's the risk and fraud. So a lot of what we are seeing is so many people and so many companies and organizations really look at their overall fraud and control strategy, right? As they look at these payments. We have them, I wouldn't say fully fleshed out and fully baked into all of the different other payment methods, right? With ACH, you have risk tolerance limits, you have the return network system, you have all of this like pre-built infrastructure to continue to support these legacy systems and payments. But as we start to look maybe towards the future at real-time payments, that to me is where the capital and the focus is going to be, really is in that space. And then what we see as well, and kind of like our lot in life as Deluxe, is to be that partner that can help provide those pieces to you, right? And help companies with their efficiencies, with the control, but also to the overall grand processing efficiency. What we're seeing is people really taking a look at their internal infrastructure and companies that have said, we want to keep this in-house, really look at saying, okay, is that my highest and best use? And is that my competitive advantage? And if your competitive advantage is not, factory production type things where you're taking in payments, doing what you need to do, keying things in, sending them on their way, we're seeing companies say, maybe that's not what we should be doing. And to your point, looking to outsource some of that doesn't fall within their natural wheelhouse, but they may have held on to just for the sake of holding on to it.
Yeah, I think it's a rare company where that makes sense. The default position should be that type of activity needs to sit with somebody who's specialized in it. The burden of proof is on saying, let's put this inside organizations. And I'll give the Martha Stewart example. It's like, it's funny to watch her do things. It's like, she makes her own paper out of a tree and she mushes it and she sends thank you cards from the start. It's like, you can do that. I'm not doing that. There's people that can do that. Why is that the case? No offense to Martha Stewart, but it's amazing what people can do for hobbies. But from a business perspective, it's certainly a challenge. Moving off the Martha Stewart lane, but back to the environment of how do we gain efficiencies, there needs to be, I think, a little bit more discussed on this next layer, this same layer that we're talking about is, even as we move to better payment methods, the old ones stay with us. And it doesn't mean that they have to be processed or managed in the same way forever. You can think back to some of the physical methods that existed, then they became imaged. They became imaged and then sent around. And so, yes, they might be physical at the start, but 90% is moved around digitally, an image, maybe not optimally, but certainly it's reducing some of the friction. And we definitely need to reduce some of the friction to gain efficiencies. What are some of the other things that you see moving in this area?
Yeah, no, absolutely. And I'm just shocked that you don't make your own paper. I thought everyone did that for their thank you notes and for their checks. But really, to your point, though, as we've talked about, it's the game of multiple and more. But it's how do you use tools that can really make things more efficient, right? So one of the things that we see oftentimes in businesses is that the trends for what you see in technology and expectations mirror what is happening in the consumer side, right? So you think around the instantaneous expectation of service, different things like that, even outside the scope of payments. But as we narrow our focus into the payments world, you still see those same trends. So like even giving the example of physical payments that come into an office that have to be imaged, right? In the golden day, right? Or the olden day, whatever we want to call it, you either sent them off somewhere. You either had a big machine that sat on your desk that cost you however much money, and you send the physical payments and all of that going through. But then in the consumer side, we could do all of that from the click of our phone, right? We took a photo of it. And what we're seeing is all of those trends have started to make their way and become more and more important within the business space. As you talk about things like people who are going out and releasing goods, as soon as they have a payment, maybe they open a truck lock. My first job out of college, I was running logistics for a Target store, and we didn't open up that truck door until we had the manifest and we knew everything was in there. And there are many companies that won't do that until they have the payment in hand, right? So things like mobile remote deposit for instances like that are ways that these are becoming more and more efficient. And, I look at like bill pay payments, things that used to, as consumers, are like, oh, well, I started online. They're going to get it on the day that I set it to go. And what you find is that's not always the case. Unless the businesses are registered within all of these networks to say, hey, I can take an electronic payment, they're still going to get these physical payments coming through. And so we now have solutions and technologies and ways to facilitate that transition from physical to digital, but it's learning how to leverage them and incorporate those types of solutions across your spectrum of wherever you want to be from a strategic perspective that is really actually going to help create the efficiencies as you look to gain with the newer payment methods that are coming online.
Great points. I'll just mention one thing before I ask you about your background. So there's a physical payment process, and then there's the digital. And sometimes the digital process is very disconnected. We talked about that with information. And then there's the enhanced digital, where the information is rich, it moves, and it allows the process to work. And I think that's really part of the journey. It's not just physical to digital. It's different levels of digital. And I know we're going to get into some of that soon. But maybe, I know you've said a few things about your work at Deluxe. Maybe you just give us a quick intro to what do you do at Deluxe?
I oversee all of our digital receivable solutions. So some of the things we talk about with how to be more efficient, how to take payments in that digital space, whether it's through an online portal, whether it's through creating the digital efficiencies coming from bill pay payments, all of that falls under my purview, as well as a lot of what I'll call our informational hub products. So you'll hear us talk about our R360 Plus, which is something that we are really, really excited and proud to bring in. And really, that's the hub of information around a company's receivables. So my job is to sit over top of all of this and look at it from the strategic perspective of how do we as Deluxe really ingrain ourselves into this digital space. And I think we've done a wonderful, wonderful job on the receivables front. And now we're looking to what is that next? Can we get insights? What can we do to incorporate all of this information and allow our clients to do that? And my job is to sit over top and say, okay, how are we going to make it happen? What are our clients asking for? And where do we see the market going? And how can we create the best partnership for everyone that comes to Deluxe?
Thanks for that background and also outlining the next podcast. We're going to talk about, leveraging information as a strategic tool, as a vital tool. So thanks for that. How to get paid in an environment of more and multiple, how to gain efficiencies. And then the third layer is there's new ways to get paid. And so how can we leverage digital solutions most effectively? If I'm in charge of receivables at a company, or I'm in treasury and I'm trying to make sure we're collecting rapidly for liquidity purposes, what's most important to be thinking about here?
That's a loaded question, because most important, I think, how do I say it, is in the eye of the beholder, right? It depends on where you're at and what your customer base looks like. I'm a firm believer that you put your customer first and you understand who's paying you, whether it's businesses, whether it's consumers, and then that helps you identify where to go. I mean, I think there are quick wins, right? We talked about a little bit on electronic bill presentment and payment. We refer to it as e-bill, but really it's that ability to take payments directly through a business's website. To me, that's one of the big quick wins because it allows you to meet your customers where they are, especially in a consumer world. I think there have been studies recently that say like over 40% of consumers say they are online constantly, which is a huge number. And if you're looking to increase your collection rate, your receivables rate, meet them where they are, go online. I think that's a really, really quick win that if you don't have one, we should talk, right? Because that's an easy, quick, tangible win to facilitate that move to digital. But then there are other things that are emerging. Like when we start talking about embedded banking, request for payment, what we're seeing from the business perspective is they want one place where they can manage everything, right? And oftentimes that's their ERP systems. And so as you look to the future, that direct integration in with ERP systems is going to be absolutely paramount because businesses want to have a one-stop shop where they go in. I think gone are the days of like the small boutique pieces of it. And we've seen a lot of fintech companies, especially over the past 8 years, who can do small little bitty pieces of this overall value puzzle for payments. But I think to me, when I look at it overall, what businesses really should be focusing on is how can I drive this? How can I really find a partner that's going to allow me to be where I am doing my work in my ERP system, wherever that is? And if it's not in your ERP system, if it's somewhere else, great. But how do you facilitate all of that and create a strategy? And to me, it starts with the quick wins and identifying where your customer base is, and then meeting them where they are and designing your overall collection strategy around it.
As you were describing that, I was wondering if you would agree with this statement. It's more about being embedded than fragmented, or focus on the embedded, not the fragmented.
I would. Okay. Absolutely. And embedded, it's kind of one of those words in the industry right now that it has many, many meanings, right? Embedded banking is like, I think one of the hot topics, right? Of how do you create that? But embedded to me can mean not only is it like from your ERP system directly to your customer base, it could be within your business platform that is online. But it's, to your point, it's just something that you don't want to see physical payments, digital payments. You have to go look at many different places for all of this type of information. It's how do you create it in one place, or get it and receive it and use it in one place that is of the utmost importance.
One of the goals of payments, it seems, is to make the payment process not just get easier, but almost disappear, almost fall outside of our sight. We're just transacting business. The payments happen. Systems are updated. It's fully embedded, if you will. Oh,
yeah. I mean, I think if I think back to 7 or 8 years ago, the term was straight through processing or lights out processing, right? And that's still the goal, is to know that payment, once your customer initiates it, goes all the way through the process without you ever having to touch it. That's wonderful, but it's not always going to happen. So you have to have all the tools in place to support the exceptions, right? And give that information and be able to capture it so that your downstream systems can do what they need to. Your goal should always be to see how much you can take your hands off physical payments, your hands off keyboards, but really, not always going to be the case, but how much of that can we achieve? I think that's still something that we are all really, really focused on.
Now we're going to look at the top layer, the outside layer. I guess this would be the frosting. Companies need to solve this issue of more and multiple, changing, drive to more efficient methods, more efficient digital methods from less efficient digital methods. Maybe you could tell me what, you think about addressing the situation with, for example, RTP. That's one channel. You have to handle other payment channels and information. You mentioned a product that you have or a platform, R360 Plus. Companies have to solve that in some way, handling more, multiple. Any thoughts on that? And I'm not setting that up as a commercial. I'm just setting up that as that has to be a strategy for integrating that, bringing that together. What do you think about, since you live in this space all the time?
Yeah, I mean, I think we've hit on so many of the pieces of it, right? It's the normalization, right? The first thing when you start talking about information is it has to be usable, right? So you have to extract what you need from that payment and that remittance information that's actually usable, is actually what you need. So to me, that's piece number one, is that almost normalization of it. And then piece number two is, okay, where is this information coming into? Where is it stored? And what we've seen from a best practice is in one place. And as you said, our R360 Plus platform does just that, right? We take in ACH, we take in wire, we take in any third-party payments, physical payments, all of that is in one place. And what that allows businesses to do is see that normalization and then have that at their fingertips. When I think of what I'll call like the pinnacle of the value chain of a treasury solution, at the very, very, very top of this is that treasury workstation, right? Or that cash flow forecasting piece. So when you start to get all of these different types of information into one place, into one database, into one system, you can actually get an accurate look at your receivables, right? I think a lot of times what happens is within businesses, we say, okay, we know this is where our account position is based on recent history. This is where we expect to be in a day. But that recent history could be, based on a multitude of things, some historical from a year ago. But when you start to actually concatenate that information into one place and you normalize it, you can get a much more real-time, insightful use of that data that improves your forecasting, that improves your internal efficiency, it improves your capital position. So all the things that we talked about in the second layer, really. But then it also gives you some proactive insights that you can say, okay, now am I going to be a little bit short today? Do I need to go find some credit? Do I need to leverage this? Do I need to do that? But without having that information in one usable place, it's almost like a treasure hunt to go look through to find all of the pieces that you need. So really, for me, that is the biggest piece of this whole puzzle, as we talk about the multiple and more, is how do you get all of it in through the funnel into one place that makes it easily usable and accessible.
So whether that process of getting it all into one place is called consolidated receivables, integrated receivables, R360 Plus, there's a way of doing that. I wanted to ask you a question about the value of the information and getting it to one place. And I know this gets down to the information, so I want to set the stage. How is that better, being able to see it that way, as opposed to if I can see everything coming in through a bank account or a series of bank accounts, 5 different payment types. How does this additional information provide better or more useful information or more insight for today and tomorrow?
Well, when you look at your bank account, you don't get all of the remittance data that you need to actually use the funds within your system, right? So when we talk about it like that, right, there's use number one of saying you can check the box that say, okay, I know I got paid. But then the second box that's directly underneath that is, what did I get paid for? Who paid me? Right. And when we look across, especially some of the legacy and older of the multiple payment channels, you don't necessarily have that at your fingertips. You might have to do a bit of digging, right? As we talked about with some of the supplemental or addenda records that are in an ACH transaction, or even at the most basic level, some of the physical payments that are coming in. So if you don't have it in one place and you don't have that, you have one team that sees piece A and one team that sees piece B. And then you're relying on all of these different pieces from one person to one system to come together in one place. that it may not be fit for, right? And so what you can encounter is fragmented data or data that doesn't align, or all of that information coming in may not be in a way that is congruent with the rest of it. And that's what having like a consolidated receivables, an integrated receivables, a receivables hub, R360 plus, whatever you want to call it, that is what makes it really, really important to have, because you're not going to experience that anymore. It's going to be in one place. You can see everything. You can gather the insights you need to and know with confidence that it's in a usable manner, that your systems downstream are going to say, give me that data. I know I can use it, as opposed to saying, what is this? This isn't usable. So having something like that, really, really critical.
That certainly makes sense. I want to see if I can go to another level on this if you have another few moments. So if the data is coming in from multiple payment types, different levels of information, is this scenario as well. If you don't have a good way of posting it, your receivable systems are not up to date. You received all this money, now they're out of date. You're probably relying on your receivable systems for better and more accurate forecasting. Now that's I can't remember the term you used, but it's not congruent. It's not reconciled. There's a latency issue, and so there's a timing aspect. So, yeah, that'll be the first one. Is that accurate?
Yes, you can come take my job, because that's the question that I ask all the time. And I'm going to give you just one. I'll make this as brief as I can, because clearly I like to talk at times. And I could talk about this all day long. It excites me. One very quick example is those online bill pay payments, right? Those payments that are coming in. When we think about them as a consumer, we talked about it earlier, right? We set it to go on, August 4th. We expect it to go out the door, and we expect the business to get it on August 4th or August 5th. And what's happening is, if you're not getting that information in real time, if it's coming in maybe through a physical payment, through a different channel, you're not able to update your accounts receivable system. So if you're not able to get that in that efficient manner, you're going to have customer satisfaction issues, right? Of misapplied late fees, of potentially services being cut off. So that's why it's really, really critical to understand, where can you speed up that collections process, make it more efficient? And then how do you get that data as quick as possible? Because you might be able to get that money, but if you're not getting the data, you still have those same customer friction points. And in a world of consumer choice, in a world of customer choice, where somebody can turn their head and see a business that probably does something very, very similar to you, your goal as a business is to reduce those friction points as much as you possibly can, so you're not creating that doubt in those customers' minds to say, wow, let me turn my head and look over here. And having that accounts receivable system be updated in an accurate manner is one of the first ways you can really, really do that.
Yeah, thanks for that. Some of those details. I guess the other side too is on the information front. If you're getting more information, enriched information, that's one aspect of it. Like those payments are coming in today, for example. Is there an aspect of that where you can get better forecasting information, not from your own system, but here's a payment that's scheduled for tomorrow or the next day? I always remember, one industry that usually pays hospitals, et cetera. They send notice, hey, we're going to make payment for this in 42 days or 39 days. And you knew exactly when the payment was going to be, and they paid. It just was a long time in the future. But that idea of visibility helps the treasurer on the forecast side. Is that currently what's going on? Is that something that's emerging, that type of information too?
I would say it's definitely emerging. It's something that I'm not seeing being done constantly. It's something that I'm seeing take a little more time, because to your point, there are going to be instances where somebody says, I'm going to pay you on day 42, especially when we start to your exact point in the medical payment process, right? In claims payments, right? You have so many different payers in the mix. You have the patient responsibility. You have the insurer responsibility. You have maybe there's another plan sponsor or something in the mix that creates all of these different pieces of it. Without having the payment, what I'm seeing right now is that it's more like, how do you match remittance to payment that you've already received? But now I think, to your exact point, it's well, I know I'm going to receive this payment. So now how do I include that in the forecasting? And that's something that's being looked at, but it's not something that I think is right now fully fleshed out. And I think that's probably because there are so many different payment types and so many different players. That is one thing that I think will be the next evolution of the use of information in that payment forecasting.
Yeah, it happens on a current day, right? With the cash positioning, you know you have known items, you have highly expected items, and that changes throughout the day. So that makes sense. I mean, the use of portals is now much more of not physical, but people have to go in and look at a portal, and maybe that information can be scraped. So very good. Thank you so much for allowing me to just poke at that a little bit. Thanks for your comments. Want to give you a chance if you had any final thoughts to leave today's discussion with.
Thank you so much for having me. And again, as we look at it, right, moving money, we do it all day long. Anyone can do that. But what do you do with the information that you need along with that money? And as people listen to this and as people look at their overall strategy, what I hope they take away from this whole podcast is that it's not just about the payment. It's about everything that goes into it and making it as robust and efficient as possible.
Excellent. Yeah, comprehensive. Look at everything in the payment and look at all payments together. Thanks so much. Really appreciate it.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.